NVIDIA has just released their Q3 earnings report. Also, is Supermicro going the way of the Hindenburg? Let's find out. So yeah, let's start with NVIDIA, down 4.2% after hours. I guess we'll see what the report says. Supermicro is down 21.25% today. Down 21%. What is going on with Supermicro? Let's find out. So anyway, Shamao says to like and subscribe. Okay, so first, NVIDIA's Blackwell has been delayed. You probably already know about this. It's been delayed by like 3-ish months due to quality concerns, and it probably won't arrive until 2025. This is what the world is waiting for. They're waiting to transition from their magnificent H100 training chips to these Blackwell inference chips, because the world's sort of transitioning from training, and now they actually want to use their training models for inference purposes. So this is going to be NVIDIA's next blockbuster product, and it's going to be huge for them. Unfortunately, it's been delayed, but that's a short-term issue. I am not concerned, because when it comes out, it's going to destroy the competition. So anyway, what else do we have? Okay, what were expectations for NVIDIA? Expectations are revenue of $28.7 billion and earnings per share of 65 cents. Estimates for October quarter, next quarter, are to come in $31.7 billion in revenue on earnings per share of 71 cents. So what do we have? We have NVIDIA announces financial results for the second quarter of 2025. All right, so what do we got here? We got record quarterly revenue of $30 billion. I like round numbers. Up 15% from Q1 and up 122% from a year ago. That is magnificent. AI is printing money for NVIDIA. Just everybody is just purchasing these chips like mad, including Tesla, which is just setting up their Cortex factory in Texas. Record quarterly data center revenue of $26.3 billion, up 16% from Q1 and 154% from a year ago. So yeah, data center is almost all of their revenue, $26.3 billion on $30 billion of revenue. That's almost everything. It's all in AI, artificial intelligence. Okay, so let's see. For the quarter, GAAP earnings per diluted share was 67 cents. So that's a beat on the top line and the bottom line. So that's a double beat. Up 12% from the previous quarter and up 168% from a year ago. Non-GAAP earnings per share was 68 cents, up 11% and 152% from a year ago. Okay, so let's get to the quotes from the CEO. Hopper demand remains strong, with the anticipation for Blackwell is incredible, said Jensen Huang, founder and CEO of NVIDIA. NVIDIA achieved record revenues as global data centers are in full throttle to modernize the entire computing stack with accelerated computing and generative AI. Blackwell samples are shipping to our partners and customers. Spectrum-X Ethernet for AI and NVIDIA AI Enterprise software are two new product categories achieving significant scale, demonstrating that NVIDIA is a full-stack and data center scale platform. Across the entire stack and ecosystem, we are helping frontier model makers to consumer internet services and now enterprises. Generative AI will revolutionize every industry. During the first half of fiscal 2025, NVIDIA returned $15.4 billion to shareholders in the form of shares repurchased and cash dividends. As of the end of the second quarter, the company had $7.5 billion remaining under its share repurchase authorization. In August 26th, the board of directors approved an additional $50 billion in share purchase authorization without expiration. NVIDIA will pay its next quarterly cash dividend of 1 cent per share. It's honestly, the dividend's so small, nobody really cares. It's all about the buybacks. On June 7th, NVIDIA completed a 10-for-1 stock split. We know about that. Okay, let's get to the actual numbers. Okay, yeah, revenue came in at $30 billion. That is massive, up 122%. Gross margin is actually down quarter over quarter, which is a surprise. It's down 3.3 points quarter over quarter, but it's up 5% year over year. So it's still a fantastic gross margin. 75.1% is an enormously awesome gross margin. It is huge. It's software level gross margins. It is massive. Operating expenses came in at $3.9 billion, up 48%. Operating income came in at $18.6 billion, up 174%. Net income came in at $16.6 billion, up 168%. And diluted earnings per share came in at 67 cents, up 168%. These numbers are magnificent. So let's get to the outlook. Revenue expected to be $32.5 billion, plus or minus 2%. Let's see, 32.5, how does that compare? It's expected to be 31.7, so also a beat. So it's a triple beat. Nice. GAAP and non-GAAP gross margins are expected to be 74.4% and 75%, so a little bit less than current. Current was 75.1, so quarter over quarter gross margins are going to be down a little bit, plus or minus 50 basis points. For the full year, mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $4.3 billion and $3 billion, respectively. Anything else special here? Tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Okay, so yeah, it's all about the data center. All about the data center. Second quarter revenue was a record $26.3 billion, up 16% and 154%. We just mentioned that. So yeah, NVIDIA, as mentioned, is coming out with several AI chips. They've got the training series, the H100 and H200, and the Blackwell series, the B200, which is basically their inference chip. So they got the training and the inference now. They also got a variety of things like NVLink, Spectrum-X, NVIDIA, and NIM microservices, AI Foundry. I mean, it's such a huge company, and they're expanding into so many different directions that nobody can really compete with them. NVIDIA, I believe, will acquire long-term 80 to 90% of the artificial intelligence market for chips. Most of the remainder will probably go to AMD, but it remains to be seen. And then the remainder off of that, Intel. And custom people like you got your Tesla Dojo, you got customized chips like Microsoft's going to produce their own custom chip, AWS is going to produce their own custom chip, but those will be small potatoes. Okay, so what did gaming do? Gaming came in at $2.9 billion, up 9% quarter over quarter and 16% from a year ago. Professional visualizations up 20% from a year ago. Autonomous and robotics is up 37% from a year ago. Everything is just growing and growing fast. This is an outstanding earnings report. Okay, so what else do we got? Statements of income, they're just knocking it out of the park. NVIDIA is knocking it out of the park. And just look at this. $13.5 billion last year to $30 billion this year in revenue. Where do you see that? Can you name one single other company that puts up these kinds of gains that are already this large? These are like small cap company gains on a mega cap company. You don't see this anywhere. You just don't see this. It doesn't happen. It doesn't exist unless you're NVIDIA. It only happens with NVIDIA. Operating income up from $6.8 billion to $18.6 billion year over year. That is enormous. That is enormous. And look, interest income is greater than interest expense. So they're getting more from the cash than they're paying in debt. So all these numbers are just fantastic. Okay, so what else do we have? We got assets. Anything stand out? Nothing particularly stands out. $34.8 billion in cash and equivalents, which we discussed, which is up from $25 billion from January 28th, 2024. So in 6 months, they've acquired like $9 billion in cash. Yeah. Oh, look at this. Accounts receivable. From $10 billion to $14 billion. I mean, my goodness. My goodness. Long-term debt is $8.46 billion. Stockholders' equity has gone up $16 billion. I don't know what else to say. This is a magnificent earnings report. What's capital expenditures? Stock-based compensation is reasonable. Depreciation is reasonable. Inventories are fine. Okay, so purchase marketable securities, $5.4 billion. Repurchase the stock, 7.4. Repayments, dividends paid, $246 million. Haha. Nobody cares. And then everything else we went over there. And yeah, a fantastic earnings report. Fantastic. I think the market was expecting more. That's why the stock is down after hours. But still, this is a fantastic earnings report, and NVIDIA is primed and ready to go for the quarters ahead. Just keep in mind, these gains, these quarterly gains, are going to slow down. These 174% gains, 122% revenue gains, they're going to slow down because comps are going to start becoming more difficult, because the H100 was ramping throughout the last 4 quarters. So the comps will become more difficult in the coming quarters and years, but they will still be great because NVIDIA is in the lead in the artificial intelligence revolution. So yeah, the future is very bright indeed. Now, is NVIDIA worth $3 trillion? You can actually reference my DCF model. It's up on my Patreon. Okay, moving on. We have Supermicro. Okay, before we get into Supermicro, we do have to know that one thing. They were hit by a short report by Hindenburg Research. This is why I made that quote earlier. Is Supermicro going to go down like the Hindenburg? So the thing about Hindenburg is they have a track record. And unfortunately, for whatever company they target, it's a pretty good track record. For example, they created this short report on Nikola when Nikola is riding high at like $14-something per share. Hindenburg Research came out with this report, and they said, basically, among other things, that their semi was rolling down a hill. It was not a functioning engine. They just rolled it down a hill, and they filmed it, and they sold that to investors as a functioning semi-truck. It was not. Among many other things, the inverters were fake, non-functional. They had no real product, but they're selling it as if they did have real products. Among many other issues with Nikola, and yeah, what happened with Nikola? The founder is going to jail for 4 years. So Hindenburg not only crushed the company, the founder is going to jail because they defrauded investors, and you do not defraud investors. So yeah, what do they have to say about Supermicro? Supermicro, fresh evidence of accounting manipulation, sibling self-dealing, and sanctions evasion at this high AI high flyer. So what do they have to say? They have to say Supermicro Incorporated is a $35 billion server maker based in Silicon Valley, yada yada, that has ridden the wave of AI enthusiasm. Our 3-month investigation. See, the thing about Hindenburg is they do investigate deeply into these companies. They contact employees. They contact customers, suppliers, contractors, anybody they can to get as much dirt as they can on the company, because these reports are detailed and they are scathing. Okay, so yeah, our 3-month investigation, which included interviews with former senior employees and industry experts, as well as a review of litigation records, international corporate and customer records, found glaring accounting red flags, evidence of undisclosed related party transactions, sanctions, and export control failures and customer issues. Okay, so in 2018, Supermicro was temporarily delisted from the NASDAQ for failing to file financial statements. So this was known. Supermicro has a history, actually, of failing to file financial statements, which is actually a pretty big red flag. And they have a history of this, though. This is not new information. There's new information today about this, but when this report was filed, this wasn't new information. And that's what a lot of this report is. A lot of this is historical information. Not a lot of this is new information. By August 2020, the company is charged by the SEC for widespread accounting violations, mainly related to $200 million in improperly recognized revenue and understated expenses, resulting in artificially elevated sales, earnings, and profit margins. So yeah, they go on to state that the Supermicro waited only 3 months to basically rehire these people, and they state that they waited 3 months after the SEC settlement before restarting improper revenue recognition, recognizing incomplete sales, and circumvention of internal accounting controls. Now, one of the things they're claiming Supermicro was doing was loading product onto a truck and then recognizing that as revenue, which you can't do. Assuming Hindenburg is correct. Again, I'm going under the assumption that they're correct, but they may not be. They may be wrong in all of this, except for the historical stuff. The historical stuff is the historical stuff. We know about all that. But for the new accusation, just remember, take it with a grain of salt, but it is Hindenburg, but still, take it with a grain of salt. Even after the SEC settlement, pressure to meet quotas pushed salespeople to stuff the channel with distributors using partial payments or by shipping defective products around quarter end, per our interviews with former employees and customers. They also go on to explain made-up demand forecasts, partial shipments, and why things didn't happen, accounting problems, but bad business culture. Just they go on a litany of things. They go on to say that the people that were fired because of the previous issues were rehired just a couple months later. They complain about family dealings. It says, for example, disclosed related party suppliers Abelcom and CompuWare, controlled by Supermicro CEO Charles Liang's brothers, have been paid $983 million for the last 3 years. Abelcom is also partly owned by Supermicro CEO Charles Liang and his wife. And what else do we have? Exports of Supermicro's high-end components to Russia have spiked through. They're also claiming that Supermicro is doing sanctions evasion by shipping product to Russia, which would put them on the naughty list with the government, if that's true. If that is true, that would put Supermicro on the naughty list. CoreWeave was Supermicro's largest customer over the last year, per Bloomberg Intelligence. But in December 2023, okay, so now they're talking about customers leaving Supermicro. Is what they're talking about here. But in December 2023, Dell announced a deal with CoreWeave for thousands of GPU servers, potentially worth over $1 billion. So what they're implying here is that a customer is leaving Supermicro and going with Dell. Tesla had been sourcing its servers exclusively from Supermicro, per Barclays Research, in September 2023, but recent reports in May 2024 and posts by Elon Musk show Dell has now won major deals from Tesla and Musk's xAI, eroding Supermicro's exclusivity. Supermicro has conceded that it is under-indexed with the world's largest companies called hyperscalers. Amazon AWS was a customer, but cut ties after delivery issues, per a former employee. And that's the other thing people are complaining about. According to this report, remember, grain of salt, is issues with customer service, issues with reliability, like this DigitalOcean complaint. DigitalOcean is another cloud service provider, a smaller one, and things like that. And those are the major arguments that Hindenburg is saying about Supermicro. Now, I'm not a lawyer. Do these arguments hold ground? I don't know. It remains to be seen. So what is Supermicro's response to this report? Remember, this was released yesterday. So obviously, Supermicro knows about this report. They got to go, you know what? They're going to claim we're releasing accounting fraud and accounting misgovernance. Oh, yeah, we're going to show them. We're going to show them big. We'll show them. How are they going to show them? By delaying their 10K. Supermicro has delayed their 10K. I mean, oh my goodness. This is how you respond one day later to a short report about delaying your... This is why they're delisted. And as listed in the short report, was delaying their financial results. So you respond to a short report about delaying your financial results by delaying your financial results. Shares of Supermicro fell 23% on Wednesday after the company announced it will not file its annual report for the fiscal year on time. Hindenburg Research disclosed a short position in the company on Tuesday, alleging fresh evidence of accounting manipulation. Analysts at JP Morgan said they think Hindenburg's report is largely void of details around alleged wrongdoings from the company. Yes, that is a legitimate point by J.P. Morgan. Is Hindenburg's research is all sort of hearsay? It's light on actual specifics. So again, with the Hindenburg report, we'll have to wait and see how it works out. Whether anything is going to happen to Supermicro regarding that report, we'll have to wait and see. But this 10K delay is a major issue, and they shot themselves in the foot. Supermicro just shot themselves in the foot on this one. There is no excuse to miss your 10K filing. No excuse at all. This is mismanagement. This is mismanagement. So yeah, that's it for me. Don't forget to like and subscribe. Thank you for watching, and I will see you in the next one.